In today's show, Bitcoin price indicator shows bearish mood, the strongest since February. At the time of recording this, the entire crypto market is crashing. As you can see, most of the altcoins are in the bloody red, and Bitcoin itself is down 3.62%, trading at the $8,000 support, and it dropped about $300 in the past hour. We'll be discussing where the Bitcoin price is likely to go from here, and also doing some price action on all the major alts. You can see Ethereum down 5.11%, also in the blood red, trading at $174. Miss Litecoin in the blood red, BNB coin in the blood red, EOS, TRX, Link. Most of the major alts right now are suffering. There's a lot of bearish sentiment in the market. We're also going to be taking a look at the daily Bitcoin charts in today's show, as well as the weekly charts. And also coming up is a Bitcoin halving. We're going to be taking a look at Plan B's latest tweet, talking about just 6 months away from May of 2020. This historically has showed us the market going parabolic. What may occur this time around? We'll be discussing this and so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every day. Be sure to smash that subscribe button and click the bell icon to receive notifications of the latest crypto news. And to celebrate the launch of our podcast, our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world, is giving away $25 worth of CMDX tokens absolutely free, just for helping support the show. For full details and to claim your free cryptocurrency, click the link right below this video in the description. Welcome back to another episode of Crypto News Alerts. I'm your host, JV, and as you can see, the market is a bloody mess right now. Bitcoin is staying alive at the $8,000 support, down 3.66%. Ethereum in the blood red, trading at $174, down 5% for the day. Other altcoins in the blood red right now are BNB, Litecoin, EOS, TRX, XLM, Dash, Cardano, Algo, Link, it goes on and on, ZRX. And to be in the blood red, it means you're down more than 5% in the past 24 hours. Right now, Bitcoin is at 7,995, so it's dropping. As I am recording this, there's a lot of bearish sentiment in the market, and that's what we're going to be talking about here. So let's start by heading on over to Coin market cap. You can see the current market cap is 216 billion for total cryptocurrency, and the volume is 58 billion in the past 24 hours, and the current Bitcoin dominance is 66.5%. Taking a look at the biggest gainers for the day, we have EDU Care, currently up 6%, trading at 17 cents. Swipe up 2.92%. trading at $1.97. Nash Exchange up 1.5%, trading at $1.30. Newton up 0.4%, trading at 0.003. And Paxos Standard up 0.16%, trading at $1 even. I would imagine that's because it's a stable coin like USDT. And USD coin and so on. Now, this is very interesting. These are the most bullish altcoins in the entire crypto market, and the biggest gainer is only 6%, right? This is pretty sad, and that's because most of the entire market is down right now. OX is down 17.47%, trading at 27 cents. REN is down 17.4%, trading at 5 cents. Basic Attention is down 12.97%, trading at 20 cents. And Chainlink is down 12.7%, trading at $2.23. And if we scroll down, you can see all of these coins, and these are all projects within the top 100 most popular crypto projects according to market cap, and they're just bleeding. So most of the entire market right now is in the red. Taking a look at the BitMEX margins, we can see the bears are dominating with 166 million in superiority, with 53.62% shorts leading the way over 46.38% longs. Bitcoin is facing its strongest selling pressure since February and has the potential to drop below recent lows near 7,750. We're not far from that right now, considering Bitcoin is trading below 8,000 at the time of recording this. The top cryptocurrency by market value fell from 83.26 to 8,086 in 60 minutes this morning, confirming a downside break of the recent trading range 84.50 to 82.50 as expected. Since then, the cryptocurrency has stabilized around 8,000, which is where we're currently at. Some observers are of the opinion that Bitcoin has carved out a temporary bottom near 7,750, and the drop from levels above 8,300 could be a bear trap. That argument is logical if we take into account the seller exhaustion signaled by a bullish divergence of the 14-day relative strength index, a widely used technical indicator confirmed last week. So far, however, that has failed to execute investors, as noted on Tuesday. Further, longer duration indicators continue to report bearish conditions. For instance, the CMF index, which incorporates both prices and trading volumes by gauge, buying and selling pressure, is currently printing a value of negative 0.14, the lowest since mid-February. A below zero reading indicates that selling pressure or the capital flight from the Bitcoin market is much higher than the buying pressure or inflow. Put simply, the indicator shows the market is now at its most bearish since February, and the path of least resistance for Bitcoin is to the lower side. At this time, the crypto is changing hands once again just below the $8,000 mark. And here we're taking a look at the weekly chart. The CMF, which is above, fell below zero at the end of September, confirming a bullish to bearish trend change, and is now seen at negative 0.14. Historically, negative readings have marked major bottoms. For instance, the CMF hit a low of negative 0.15 in February, following Bitcoin remained flatline below 4,000 for almost 2 months before breaking into a bull market in early April of this year. The latest bearish signal, however, looks reliable, as there's no signs of a bullish reversal on the weekly chart. More importantly, the CMF continues to lose altitude despite the repeated defense of the 100-week MA over the last 3 weeks, a sign the investor sentiment is still quite bearish. The index would have risen due to increased capital inflow if investors were convinced by the defense of the 100-week MA. Furthermore, the MACD histogram is also charting deeper bars below the zero line, indicating a strengthening of bearish momentum. What's more, the 14-week RSI has convincingly breached the support band of 53 to 55. That region has served as strong support throughout 2016 and 2017's bull market. The 5 to 10 week moving averages are also trending south, indicating a bearish setup. All in all, the stage looks set for a retest and possibly a break below the 100-week moving average support at $7,758. So we're going to be keeping our eye on the Bitcoin charts. Now taking a look at the daily Bitcoin charts, the 50-day moving average holding below the 100-day moving average is a bearish sign. According to Naeem Aslam, chief market analyst at Think Markets FX and contributor for Forbes, BTC created a bearish outside bar candlestick pattern on Tuesday, signaling a continuation of the sell-off from October 11th high of 8,820. The RSI remains in bearish territory below the 50, and the MACD is now producing shallow bars above the zero line, indicating the corrective bounce from 7,750 has ended. The bullish divergence of the RSI on the daily line chart has lost its shine due to the strong rejection at the 200-day moving average last week. So the risk-off may weigh over Bitcoin. The bearish technical setup is accompanied by price-negative developments on the macro front. Global economic growth is expected to fall to 3% this year, the lowest since the 2008 financial crisis, and down from 3.8% seen in 2017, according to the International Monetary Fund, which is the IMF. Further, China-U.S. political tensions are escalating. The U.S. House of Representatives on Tuesday passed bipartisan legislation in support of human rights in Hong Kong. China sees the move as an intervention in its internal matters and has warned of retaliation if the U.S. continues to push forward Hong Kong-related bills. As a result, the risk assets are flashing red across the board. At this time, stocks in the UK, Germany, and France are reporting modest losses. The Shanghai Composite Index fell by 0.44% during the Asian trading hours, and the futures on the S&P 500 are currently shedding 0.36%. We also have to keep in mind, even though the crypto market is extremely bearish at this moment, things can change around like this. There's still a lot of bullish news happening in crypto every single day. And let's not forget the infamous Bitcoin halving is only a few months away. And historically, it has shown us that every time there is a halving, the Bitcoin price builds up leading to the halving and then goes absolutely parabolic. So will the entire crypto market go parabolic once again? Let's take a look over on crypto Twitter, checking out what Plan B had to tweet. He wrote, "We are about 6 months before the May 2020 Bitcoin halving. In 2012, Bitcoin jumped from $5 to $12, which is 2.3x in those 6 months before the halving. And in 2016, Bitcoin jumped from $350 to $650, which is 1.7x. And as he shared here on the graph, you can see in the dark purple is the 2012 halving, and the light purple / pinkish is the 2016 halving. Let's also keep in mind that after the halving during 2012, that the Bitcoin price went up about 400x during that next bull cycle, which lasted, I believe, a couple years. And then in 2016, after the halving, the Bitcoin price went up about 80x. That was after the halving, once again, when things went parabolic, and we all witnessed this. The altcoins went crazy as well. So that could potentially happen again, but only time will tell. So are you bullish or bearish on Bitcoin? Let me know for the short term as well as the long term. Obviously, the market is very bearish at this moment, but like I said, before you know it, the entire market can turn around just like that. All it takes is one big event, like what happened earlier this year when Facebook came out and introduced the idea or concept of Libra. The entire market just went through the roof. And a lot of people say that was a big factor. That was one of the many reasons why Bitcoin rose so significantly, as well as, a lot of bullish, vibes and energy inside of the market. But that's how fast the crypto market can switch. I mean, one day we're bullish, the next day we're bearish. I think we need to think more from a long-term perspective. And let's think, this time next year, is the crypto market likely to be ahead of where it is today? I think so. You know what I mean? I have no doubt in my mind that over the long haul, Bitcoin will continue to increase in value due to the scarcity built in, just like it has been over the past 10 years. Numbers don't lie. You know what I mean? All right, and taking a look at some of the replies to Plan B's tweet, Emmy wrote, "Most gains have been typically within 1.5 years following the event," and Plan B replied, "Yes, that is on top of this 1.7 to 2.3x. So leading up to the halving, Bitcoin goes up, the market goes up, but it doesn't go parabolic and crazy until after the event when it reaches the next real bull cycle. And that's when we'll see a true, genuine alt season as well, in my humble opinion. I also want to state that I do not give investment advice. If you're going to invest into cryptocurrency, please do so at your own risk. Tweak wrote, "Litecoin did a halving from $120 to $60, and that's true. After the Litecoin halving, the price actually continued to depreciate and hasn't really gone up much since. So that's a good point to point out." And Plan B wrote, though, "Litecoin has no correlation nor cointegration with stock to flow nor halving. So that was predicted and expected by the informed." Touche. Prime wrote, "Rect Capital has a great post on the subject," and this is the post. "The upcoming third Bitcoin halving is already priced in. I seriously doubt that. Most people don't know what the halving is, let alone its effect on Bitcoin's price. Most people invest emotionally." And that's a good point. I also want to point out Tika Twari During his 5 coins to 5 million live cryptocurrency investment event, he talks about this rare phenomenon, which is the Bitcoin halving, which occurs every 4 years. And Tika believes that the market is going to go parabolic just like it did in the previous times of the halving. Plan B wrote, the halving is not priced in, or the stock to flow model is wrong. Rect Capital put correct, it's not priced in. In my article, I simply analyzed the effect that the halving has had on Bitcoin's price prior to and after each of its halvings to date. And I'll be sure to include this resource link in the show notes below this video in the description. Whew. What a rough day for the crypto market. Well, that's going to conclude today's show. As always, I appreciate you tuning in. Don't forget to smash that subscribe button and click the bell icon to receive notifications of the latest crypto news. And before I go, I want to give a special thanks to our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world. To celebrate the launch of our podcast, they're giving away $25 worth of CMDX tokens absolutely free, just for helping support the show. For full details, click the link right below this video in the description and claim your free cryptocurrency. I look forward to seeing you on tomorrow's episode. Peace.